Hi there, welcome to kneppyinvests. In this episode, I'm going to talk about a few companies that have been recently put onto my to buy watch list. And my to buy watch list is simply companies whose momentum and sentiment is shifting into the positive realm. And I'm thinking of taking a position. I've acted upon this and have actually taken two positions in two of the companies, or taken positions in two of the companies I'll be talking about in this video. Doing something a little bit different, I am trialing Tradingview, so I'm going to go to full screen mode. Unfortunately, I haven't figured out a way in full screen mode to show the camera, so that's something I'm going to have to maybe figure out for the future, so you won't see me when I look at the charts for these companies. So what are these companies I'll be looking at in today's video? The five companies I'll be focusing on in today's video include IOOF, Magellan, IAG, Origin, and Telstra. So fairly big companies on the ASX, but they all have something in common. You'll see that when we look at the charts. In fact, I'll be looking at 7 companies today. So when I talk about IAG, which is Insurance Australia Group, I'll also be looking at QBE and Suncorp because there is a bit of momentum in insurance companies right now. I'll talk about that when I discuss IAG. So there's actually 2 of these companies I have taken a position in. I won't talk about which companies until I talk about those individual companies later in the video. So let's get into the first company, which happens to be Magellan. And here is the full screen version of Tradingview. I am doing a trial of this service and I am liking it. The main reasons I do like it, it's a little bit more interactive. So you can zoom out, zoom in, go to dailies and weeklies fairly quickly. The other thing I can do is put information on these screens and it remains there for as long as I want it. So Magellan Financial Group, ticker code MFG. This company was formed in 2006, a fairly young company, particularly compared to other companies I'll be talking about in today's video. This is a fund manager. So because they are a fund manager, they do derive revenues through management and service fees and performance fees, revenue of 654 million, so a fair bit of fees there, and operating cash flow 424. You would think they are or have some high profit margins because they wouldn't have much cost at all. Most of the fees are through management service fees, only $12 million in performance fees. This company was formed or created by Hamish Douglas and Chris Mackay. So only been in existence for 15 years, but it has been a significant wealth winner for any shareholders who have had a position in this, particularly since about 2011. It's increased in share price from $2 to a current share price of $50. Now, because this is a fund manager, I don't really follow fund managers all that close, but they do report funds under management every single month, and they did release their most recent funds under management a few days ago, which was $109.9 billion. And what you want to see there is a bit of growth. So I do have funds under management, 5 time steps here, going back to January 2020. And in January 2020, they had 100.7 billions. It did drop during the COVID-19 financial panic to 94 billion, but has been growing very nicely since then. We did see it drop slightly from May, but doesn't seem like the market was overly concerned with that. I'll just zoom in here. The main reason I've put this onto my to buy watch list is there was a bit of resistance at around $49.50 because that was the previous high that was reached towards the end of April. And we did see the share price pull through that on the 8th of June. It has retested it on the 9th of June. And if we do see the share price go a little bit higher, I think we might be seeing a new uptrend developing here with Magellan Financial Group. It's not the sort of company I would take a position in, but I'm going to be talking about all sorts of companies, and all sorts of companies can be put onto my to buy watch list. Next company I'll be looking at is IAG, or Insurance Australia Group. I'll also touch upon QBE and Suncorp, and there is a reason behind that. I'll touch upon that when I talk about IAG, mainly to do with the fact that I am hearing a bit of chatter about insurance companies among fund managers and fund managers can, en masse, if they're interested in a group of companies or a company, can, en masse, force a share price higher simply because they start buying in. So I think it's very important to see what fund managers are becoming interested in. And insurance companies seem to be the flavor of the month right now. So let's look at IAG's chart. Insurance Australia Group, ticker code IAG. This is the largest general insurance company in Australia, New Zealand, about $12 billion of premiums underwritten per year. Founded in 1920, I believe they were NRMA when they founded, but NRMA demutualised in 2000, and that's when IAG listed on the ASX. Now, it is a group of insurance companies, hence the name Insurance Australia Group. So included in that group is NRMA Insurance, CGU, SGIO, Swan Insurance, WFI, and AMI. Now, when I started investing, I had no interest in insurance companies at all. There's probably the one group of companies I had no interest. That has changed in about the last year. So I don't exclude any companies on the ASX. I will be interested in any companies. Over the past about 3 weeks or so, I've noticed there's a heightened interest in insurance companies by fund managers. I've heard it being talked about twice in podcasts. They didn't really discuss why they're interested, but they did recommend, particularly QBE. They didn't really mention Insurance Australia Group, but they're really focused on QBE. And then 2 days ago, I heard another fund manager talking quite positively about insurance companies. He talked about IAG and QBE. And unlike the previous two fund managers, he started talking about why he's interested in insurance companies. It all comes back to other financial companies like banks. Their share price have been going on a run over the past 6 months, but insurance companies' share price haven't. And he does believe, and I think maybe this is what the other fund managers are thinking as well, it's about time that the share price of insurance companies go on a run, and we are potentially seeing that now, particularly with QBE and Suncorp. I have taken a position in Insurance Australia Group. I'll just zoom in here. It could be a bit of a premature position because there's a little bit of resistance at around $5.40 or just above $5.40. I've taken a position at around, I think it was about $5.19, so a little bit lower, but it does look like the share price wants to get into an uptrend over the past 2 weeks. The main reason I've chosen IAG over QBE and Suncorp is the share price of those two companies have been going on a run over the past 2 months. So let's have a look at those two companies' share price, or chart, I should say. This is QBE's chart, and the main thing I want to just point out here is the highs post COVID-19. So everything, I'll just actually zoom in here so you don't see the COVID-19 financial panic. Just zoom in here, and what you'll really want to focus on here is the post COVID-19 highs, and the most recent high, excluding what's happening now, was August 2020 when the share price was around $11 or so. In the past week or so, QBE's share price has breached that high in August 2020. So we have seen QBE's share price going on a run since February. So it's really a 3 or 4 month run in the share price. So a little bit longer than what we're seeing with IAG. This does look a little bit more bullish than IAG. So you might say, well, I should have taken a position in QBE. But I do believe because QBE's share price is going on a run and IAG is lagging behind, I think eventually over the next few months, there is a potential that IAG will catch up to not only QBE, but also Suncorp. And since I just talked about Suncorp, let's look at Suncorp's chart now. And just like QBE, we have seen the post-COVID-19 high back in June breached over the past few months. So another nice looking chart, maybe not as bullish as QBE, but my preference right now is IAG over QBE and Suncorp pulling up the rear. Next company I want to talk about is Origin. This is an energy company, and when you look at the chart, you'll see why I have put this onto my to buy watch list. We've seen a lot of energy companies like Origin, AGL. Their share price has been under pressure for quite a while, and we have seen the share price go on a bit of a run in about over the past week or so. Whether this run can be sustained or it's just a very short term, maybe a dead cat bounce, that sort of thing, remains to be seen. So let's have a look at Origin and see whether this is a potential buy. Origin Energy, ORGZ, ticker code, so integrated energy company. Fairly interesting company or history behind this company. I did not realise they demerged from Boral in 2000. So they were part of Boral before 2000. So that's something new as I did my research in this company. So this company is all about energy exploration, generation, supply. So that's energy sales and renewables. And this chart goes back to 2020. You can see the COVID-19 financial panic when the share price fell all the way to $3.80 from a high of $8.80. We did see the share price bounce just like all the other companies on the ASX. But ever since that bounce where the share price got to a high of $6.40 in June, we've just seen the share price drop further and further. However, they did do a business update on the 30th of April. Fairly negative. The share price went down 9% on that update. So you could think, well, that's fairly bearish. And we did see the share price fall for the next month or so. But over the last 6 trading days, we have seen the share price increase from $4 to a current share price of about $4.84. And that $4.84 has breached the most previous high back in April. So there is a potential breakout in the share price with Origin. And same thing is happening with AGL. We've seen AGL share price going a bit of a run. I'm not sure what's happening. Haven't delved deep into what's caused this run in energy companies, but there is definitely something positive happening here. So I just want to see if this bullish run, we'll say short-term bullish run in energy, can be sustained. If it is able to sustain, maybe we are seeing the beginnings of a new uptrend in Origin Energy. The second to last company I want to talk about is Telstra. I wasn't originally going to include this, but again, I was listening to a podcast today and I was really surprised to hear a lot of bullishness in regards to this company. This has been a dog stock ever since they listed many, many years ago. So I'm just going to talk about this company very briefly. We all know what Telstra does. So let's have a look at their chart and maybe we can understand why there's a bit of bullishness in the share price right now. Telstra's ticker code is TLS. This has been on the ASX since, I believe, 2005. And really the share price has done nothing since then. I'd say most people hold Telstra simply because of their dividends. I'll be surprised if the majority of Australians, particularly because of their super, don't own Telstra in some sort of way. Market cap of Telstra is $42.3 billion, revenue 21.8, and operating cash flow 7.7. Revenue and operating cash flow and profits have been going down over the past 10 years. So this is not a growth company. However, I have heard a few fund managers have talked to management and they've come away impressed with the way management are looking at the future in regards to Telstra. And I do believe some fund managers might be thinking that Telstra could grow in the next 5 years. And that could be the reasoning behind the increase in share price over the past 6 or 7 months. We did see the low in Telstra share price of about $2.70 in November. And ever since that low, the share price has been increasing. In recent days, it has breached a resistance line at about $3.40. That was the previous high in July of 2020. So potentially this is the beginning of a new share price run in Telstra. We have seen this in the past. The share price of Telstra can go on a bit of a bull run. So it's not really the long-term hold and buy sort of company. It's just only take a position when the share price is increasing and then sell out when the share price gets to like $5, $6 or so. Whether this is the beginning of one of those bull runs in Telstra share price remains to be seen. I am a little bit skeptical that this will become a growth company, particularly because of the history behind it. It's been the complete opposite of a growth company in the past. There is a reason why I've left IOOF to last by process of elimination. This is another company I've taken a position in. Unlike IAG, however, where I do believe I could have, for argument's sake, been a little bit premature taking a position in that company, you probably cannot argue likewise for IOOF. In fact, today we've seen the share price rise 4% when the overall market fell by 0.3%. So I decided to take a position in a few days ago, and ever since then the share price keeps on running. A really fantastic looking chart over the past month or so, and it does look like there is a lot of momentum, a lot of positive sentiment behind this company right now, which is a little bit different than when you talk about this company going back to September 2020. So let's talk about that right now. IOOF Holdings, IFL is their ticker code. Interesting bit of history here. Now, I did do a fair bit of research in this company simply because I was fascinated with the chart here. So, financial services company founded in 1846. So, I would say this is one of the oldest companies on the ASX. Their IOOF actually stands for Independent Order of Odd Fellows, if you can believe that. I'm not sure if I can believe that. Products and services they provide include financial advice, investment management, and super and estate and trustee services. Floated on the ASX in 2003. So even though they've been around since 1846, they've only been on the ASX for the past 18 years. Going back to September, they did announce an acquisition of MLC for $1.4 billion. MLC is or was NAB's wealth management business. So that $1.4 billion was through $1 billion in capital raising, $250 million in debt, $200 million in a loan note to NAB, and $40 million in cash. The market absolutely hated this acquisition. Share price fell 22%. I do believe the capital raising was done at $3.50. So market hated. I do remember back then a lot of negative sentiment around this announcement, this acquisition. So no reason to take a position until we saw some positive. They released a business update in February. Share price went down 10.6% on that business update. So the company did say that this acquisition will be 20% EPS accretive on financial year 21 pro forma basis. I do notice a lot of times when a company makes an acquisition, they will say it will be an EPS or earnings per share accretive acquisition. So I always take those sort of statements with a grain of salt. Now, the acquisition would make IOOF Australia's largest provider of financial advice. They did do a business update on the 28th of January, which the share price went down that 10.6, $202 billion in funds under management and advice and administration. So that's FUMA. In 29th of April, they've increased that to $203.9 billion. And on the 31st of May, the acquisition was complete. But when they announced this acquisition complete, the share price started to go up. Now, with this acquisition, the funds under management and advice and administration will increase from the current $204 billion to $510 billion. So a significant acquisition this will be. But the main reason I've got excited with IOOF Holdings is simply what's been happening with the share price over the past month or so. So I'll just zoom in here. You can see the share price has been going on a run since around the middle of May. We've seen a bit of a consolidation in the share price at around about $3. So we'll say between $3.70 and $3.40. But over the past 2 weeks, the share price has just taken off. I took a position when the share price went up something like 8% in one day on no news. We saw the share price go sideways in 2 days and starts increasing. A very bullish looking chart. I haven't heard much chatter among fund managers with IOOF, but I do believe this is all to do with acquisition. This is possibly the market believing that this acquisition will be very beneficial for IOOF Holdings. So that's the main reason. Well, the main reason I've taken a position in this company is simply because of what's happening with the chart here. Very bullish looking chart over the past few weeks, and I think the market is believing this acquisition is a good thing for the company. That's it for this video of ASX stocks that have been put onto my to-buy watch list. I've taken 2 positions with IAG and IOOF. Hopefully I've been lucid. I've only had 1 hour sleep in the past 30 hours. So if I'm not lucid, then maybe you won't understand what I'm saying right now either. So leave a comment in the comment section if you like this format with the TradingView full screen. If you don't like it, leave a comment so I can adjust back to the way I've been doing things. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all for this video. Have a good day. Bye.